How do bank examiners assess banks? Have you ever wondered how bank examiners keep our financial institutions in check? Their assessments are vital for ensuring that banks operate safely and comply with regulations. Let's break down how this process works. Bank examiners follow a structured approach to evaluate banks. They focus on risk management, regulatory compliance, and financial stability. This is essential to prevent systemic failures while allowing for a free market. One of the primary areas examiners look at is risk management systems. They assess how banks identify, measure, and control various risks. These include credit defaults, market fluctuations, and operational failures. Examiners conduct stress tests on loan portfolios and evaluate liquidity reserves. This helps gauge how well banks can withstand economic downturns. Conservatives often believe that well-managed banks should self-correct through competition rather than relying heavily on regulations. Compliance is another critical area. Examiners check if banks follow laws like anti-money laundering standards and consumer protection regulations. While many conservatives advocate for reducing bureaucratic burdens, they also recognize that basic compliance is necessary to prevent fraud. Examiners review internal audits and governance practices to ensure accountability. Financial health metrics play a significant role in assessments. Key metrics include capital adequacy ratios, asset quality, and earnings stability. Examiners analyze whether banks have enough reserves to absorb losses without needing taxpayer-funded bailouts. This aligns with conservative principles of fiscal responsibility. They also evaluate management effectiveness, looking closely at decision-making processes to avoid excessive risk-taking. From a free market perspective, examiners aim to balance oversight with incentives for banks to innovate. They identify regulatory inefficiencies that may hinder competition, such as redundant reporting requirements. By focusing on outcomes rather than strict processes, examiners encourage banks to adopt cost-effective risk controls while maintaining safety. In recent years, examiners have started using data analytics to spot emerging risks. This proactive approach allows for timely interventions. Conservatives support this method as it can lower long-term regulatory costs and help prevent crises that might lead to increased government intervention. The goal is to maintain a stable banking sector where market discipline guides sound practices. Through this thorough assessment process, bank examiners ensure that banks remain solvent and compliant. They act as safeguards against systemic risks while respecting conservative values of limited government and fiscal accountability. By balancing oversight with the need for innovation, they help create a healthier banking environment for everyone.